Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your agriculture update. Good day. Ira Epstein of Linn Associates with your agriculture update for this Monday, and this is the 4th of June, 2018, and we're about 2:50 p.m. Central Daylight Time. Big break in the soybean market, the wheat, the corn. You could say on one hand it's that the crop plantings are caught up or normal. You could say on the other hand the trip back for Wilbur Ross, our Commerce Secretary from China, brought nothing. Now, I'm guessing at that, but I've not seen anything in the press that says, oh, we've made good headway and so on and so forth. What I did read was China, in their press, said that if the U.S. goes forward on June 15th with its other $50 billion in tariffs, that anything that's been done or agreed to date is null and void. So they drew the red line in the sand, and that's not good for the farmers at this point, at least from my perspective. You saw the hog market down today. You're seeing all the grains down at this point in time, and that's where I'm going to have to leave that part because you got to guess what's going on. The stock market's not that concerned about it. U.S. economy acting still strong as can be. Dollar in a minor corrective mode as a number of the foreign currencies are getting a bounce, but that's it. Copper market strong today, but I'll deal in the metals about why that is. Now, when you take a look at the weekly area chart of closes, you've still got this, if you will, 1054 1/4 down to 994 3/4 on a closing basis. You had a bounce, didn't take out any prior highs. The question is on this break, will you be able to get through that 994 3/4 on a closing basis? More important to me is what the chart action was. I'm going to go back a day here. This is how the market looked on Friday's close, and we still had that gap that I told you about 2 weeks ago. If you go on charts, you generally don't find gaps on charts. These markets have a way of filling them. In order to fill the gap, the market had to get down, I think, to 1007 3/4. You filled that gap today. It's all done. So now the question is, are you going to go through these important lows or not, just around that 994 3/4 zone? And I think that's what traders are watching. Again, they could not have gotten a beneficial lift by hearing, at least what I did over the weekend, nothing from the U.S. on the trade and China putting its red line in the sand on there. And red lines are important. You know, I use them as moving averages. When you look at the swing lines here, you got lower highs, lower lows. That is bearish. You'd have to take out 1026 3/4 or so in order to negate the downtrend. Resistance even above that comes in at 1032 3/4, the 100-day moving average. But since you're under the 18-day, as I call it, that red line right here, it tells me the bias is down, the trend is down. Where might the market head? One number could be this 991 zone, which is the lower Bollinger Band. And the way the action is in the math today, that number is probably going to drop tomorrow as well. When you look at momentum, it's down. So we have a downtrend as defined by the swing line. The bias is down. Momentum is down. In order to negate all this, you've got to get back over 1026.5. My instincts are that until you get the next weather scare in this market and or we hear something positive out of Chinese trade, this market sinks away as plantings are going pretty well. The markets should be caught up. We'll see how this all plays out. In the meal market, you fell today to the combination of the 100-day average and the lower Bollinger Band. Now, both numbers that make up the slow stochastic are today under 20. On Friday, they were both under 20, not the day before. Tomorrow's very important. If they both close under 20 again, then they do what I say. They convert from being oversold to locking in a bear trend until that red line gets back over 20. That's a very bearish signal. So I'm expecting a bounce in the market because you typically don't embed. You get overbought, you get oversold, it goes back and forth just like you did here. We'll see what happens. In the soybean oil market, this has joined the bear ranks. So now you have a market that's got lower highs, lower lows. I would expect to see sellers willing and able up at the 31.22 level. If you get over 31.65, you probably scare them out of that position. If you don't scare them out, maybe you get to the lower Bollinger Band. You have the trend down as defined by the swing line. You've got the bias down, and you've got momentum down. In the corn market, you let go of everything today. So here's a market that was just up, as you can see here, into the 411 area. You've dropped 31 cents. That's a big move in corn, by the way. It's not a small move. Now you're under the lower Bollinger Band and the 100-day average. You're accelerating to the downside. You might be ahead of yourself, but everything looks good for the corn. I think you're going to see the plantings are ahead of themselves probably. Emergence is probably looking pretty good in different areas. And we certainly aren't having hot weather that is destroying the crop. So very important, and everything bearish happening here. In addition, questions about trade. Now remember, there's no NAFTA right now. Mexico bought a lot of our corn. What happens with all that? What about the tariffs they're going to put on things? You've got to keep that in the back of your mind. We're losing some of the trade, you might think. There's room for it to go elsewhere other than Mexico. The world's only got so much grain, but you're putting pressure on all the markets, as you've seen in the wheat. Lower highs, lower lows, bearish at this phase. If this downtrend continues, might we go to the 490.5 100-day average, resistance back at 514, and you'd have to take out 528 to break the current bearish pattern on the chart. In the sugar market, when you got up to the magical numbers of the 100-day and the upper Bollinger Band, I pointed it out to you as you were headed there, and I said, you've hit your upside targets. I had no idea it was going to break this much, but not a surprise. I think the longs did a lot of bailing. Now, this market's got to restructure. Momentum's pointing to the downside. You've got a higher high and lower low. You fell right back to that line in the sand, that 18-day average of closes, and held. In the coffee market, momentum now correcting and shifting back to the downside. The market, again, like sugar, got up to the 100-day in the upper Bollinger Band. And in fact, in this market, if we take a look, the close on Friday was at 122.75, just under that upper Bollinger Band. You had 1 day over it, came back, found the support at the 100-day average, and let go of that today. I would not be surprised if the market makes a run to the 18-day average of closes, but the fact that it's overbought might keep willing buyers away from the market. Here is what happens in markets that develop when I talk to you, those embedded readings, and if they ride the lower Bollinger Band, no way to tell when they let go. The market's under the 100-day average, and if you take a look at Friday, you got to that number and you bounced. Today it gave ground. You're also under the lower Bollinger Band. Now, you can be under that band for a short period of time, but only 5% of the total time do you stay under it, and if you put consecutive days, you even shorten that time. The fact that it's riding this band just says how bearish it is. Is it going to be a crowded trade to the downside, which means a lot of shorts pushing the market? Don't know the answer. In the cotton, certainly looks like an outside day down to me. Overbought condition. Got itself over that upper Bollinger Band, and as I said, often you'll have a better shot at entry if you're that bullish up there, and that's what's happened. This market's pulling back at this point. Is it the end of an uptrend? It could be. Take out 91.74 and I could make an argument back to the 18-day average of closes. But I wouldn't be bearish. Why? Because you're over the 18-day, and that keeps me with the bullish bias in the market. In the cattle market, you've still got the pattern of higher lows, higher highs, a correction mode. I see that could set in. You're overbought in the market and trying to set it back. If you take a look, you got back today under the 70 level. Let's go back a day, right through here. And if you come in on Friday, you can see we're overbought with readings over 70. I consider any reading in the slow stochastics over 70 overbought. And today you got them both back under. So could we see the support show up at the 100-day average? No reason why not. Feeder cattle, got up to the combination of the 100-day and the upper Bollinger Band, giving up the momentum turning down, trend still up, support back at 142.60. And in the hog market, I was surprised it bounced as nice as it did, because this is one of those meats that could be hurt with China saying they're not importing any of our pork, blah, blah, soybeans, whatever they want to say. They got to go get it somewhere. So if it's not the U.S., they buy from somebody else, then we'll send our products elsewhere. I don't think that they fully understand that. If they bought all their needs they could elsewhere, there's still not enough soybeans for them. Higher lows, higher highs, market is stalled out, the momentum is down, the swing line is up, and through here, the momentum down. So I said momentum. Bias is down because you're under the 18-day average. Momentum is down, but the swing line is up. A big nothing trade, as I'd call it right now. Now, I'm going to spend this week going back and working on my gold report and maybe even a silver report. A lot of people have asked me to bring them up to date on it. We've had an awful lot of sideways action, and I'm going to cover it with an awful lot of charts. Now, if you want to get a copy of it, you got to go to our website and sign up for it. I'm not sure I'll just do another mailing of it. You have to sign up for it, and then I'll pay attention. We'll see what I want to do. But I'm going to try to include all this in there and give you an idea of what that's about while you're on our website. And remember, you can always click up here to get on it. Take advantage of our other offerings, especially our Linn Research if you haven't tried it. You can always call my staff. Go to www.iraepstein.com. Takes care of itself from there. I'm Ira. You have a good day.